Good evening. This is the India Development Debate. I'm Supriya Srinath right here on ET Now. And before we go any further on this leg of the India Development Debate, coming up right next at 9:30 p.m. is an exclusive interaction with none other than Pariyappan Chidambaram, putting the opposition's point of view across and asserting that UPA actually clocked in higher rates of growth. Of course, right now we've got two sympathizers and two technocrats of this government, Vice Chairman Niti Aayog Rajiv Kumar and Surjit Bhalla, who both join us right here on the India Development Debate. But first up, the growth debate is certainly back. An expert panel headed by noted economist Sudipto Mudle has pegged the GDP growth during 2006 to 2007 well past the magical 10% mark. The Congress has already claimed victory, stating India's best years were during the UPA regime. Speaking exclusively to ET Now earlier in the day-to-day, former Finance Minister P. Chidambaram said the data makes it clear that growth on the UPA 1 and UPA 2 was much higher than during the NDA rule. He also states that Modi government's claims of an 8.08% growth in 2003-04 is highly exaggerated due to the low base effect. The Modi government has, however, rejected the Congress's claims. Union Minister Arun Jaitley states the UPA government benefited from the tailwinds of Vajpayee-era reforms. He also asserts that the Manmohan Singh government compromised on fiscal discipline, put the banking system at risk thanks to reckless lending. Again, a sentiment that has been echoed and pronounced by the Vice Chairman of Niti Aayog, Rajiv Kumar. Let me just begin this discussion with two eminent economists who are both joining us on the channel right here. Thank you very much for being with us. And this is a topic I'm sure so close to both your hearts. So we've decided to make the first hour of this debate defending the NDA government and defending the UPA government, when I'm going to be putting across some tough questions to Pariyappan Chidambaram, is going to be the second half at 9:30 p.m. But Rajiv Kumar, sir, I will just begin with you. And my first question is obviously going to be on the growth figure. I know you don't believe that UPA produced the best years as far as economic growth is concerned, but truth be told, the number of 8.08% that is being termed by not just the government, but some of the economists out there, is actually the number for the last year of the NDA regime, which is 8.08. This was good because this was built on a low base of 3.73%. The Congress says you've got to look at average growth rate, and the average growth rate in NDA 1 was 5.8%. In UPA 1 it was 8.9%. In UPA 2 it was 7.4%. And in the present government it is 7.2%. How are you going to poke how are you going to poke into those arguments, as well as how are you going to defend today's growth?
Hi, Supriya. Supriya, you know, averages hide a lot, and averages, for example, don't tell you whether you got a growth rate which is or a which is on a trajectory which is growing higher or which is going lower, because averages average things out. And the fact remains that in the NDA 1, the 8.01 was reached on a growing trajectory, and that is the momentum, that is the tailwind that Mr. Arun Jaitley talks about. While in UPA 2, if you notice, whatever be the averages they have, but the fact is that the last 3 years of that UPA 2 period, the growth actually crashed and was on a sort of declining trajectory. And so this is, to talk only of averages is simply to fudge things, and I don't think that's required, because it is the state of the economy in which you find yourself, which is far more important than just the average numbers. And as I've said earlier, and as I've argued earlier, averages also don't tell you how that growth was achieved, because that is far more important, I think, than just achieving the growth numbers. If you are going to be fiscally imprudent, and if you're going to be exuberant, as as some people said that, oh well, that's just normal in high growth times, then of course you can produce whatever numbers you want. You can produce an inflation number which is 10.7% and a food inflation of 12%, and a fiscal deficit of 6.5%. But that so you can produce whatever numbers you want. But the fact is that, did you produce those numbers with macroeconomic stability? That's the important point that one has to remember. But equally important is the fact that the one that I mentioned earlier, that let's look at how whether you left, on which side of this triangle are you when you left the government. The NDA 1 was on this side and the UPA 2 was on that side, and that's what's more important. Let me just leave it at that at the moment, but then I'll have to come back to you to say that look, this is not something new for the UPA governments, because the same thing happened in the latter half of the 80s.
Right. Okay. Okay, this may not be true, and I know you're talking about the Rajiv Gandhi period, and I know you're referring to fiscal discipline. I will come to you on just a bit on that, but let me just get opening comments from Dr. Surjit Bhalla as well. And Dr. Bhalla, you know, Dr. Rajiv Kumar isn't very convinced. He believes the economy was in an upswing. The Congress party says 8.08% was on a very low growth year of 3.73%. That was the base year, and which is why it looks spectacular. The truth, obviously, I'm presuming somewhere lies in between. Because truth also be told, in the year when India clocked in 3.73% growth, which is fiscal year 2003, agriculture grew in the negative zone. Agriculture actually contracted. So is 8.08% a flash in the pan? Is an average to a better figure to go with? Dr. Kumar insists averages hide out a lot.
Okay. Well, several points. First, regarding NDA 1, that 4 of the 5 years that NDA 1 was in power happened to be one of the worst 4-year sequences of rainfall. As you correctly mentioned, 2002-03 was really bad, but even 4 years was very, very bad. But so that's one about NDA 1. I'm going to talk a bit on the new GDP data that has come out. And I wrote a little bit about this yesterday, and there is a detailed article in the Indian Express tomorrow. Sorry to be advertising it, but indeed it is quite relevant, because what I find is that the GDP back series that has been constructed is really very, very questionable. And it is questionable in regard to one area which we can all easily relate to, is trade, hotels, transport, and communication, which accounts for about 20% of GDP. Now, the new back series shows that this sector grew at an average real rate of 17% per annum during the UPA 1 years, miraculously double what it had grown, or more than double actually, close to triple in real terms what it had grown under NDA 1. So if you accept that, then you can accept anybody or any fact. So I think there are serious conceptual flaws in the numbers, not even going into what went up, what went down, etc. If somebody can answer, either in this program or tomorrow or day after, or you yourself, that wholesale and retail trade basically grew at 17% per annum in real terms during those 5 UPA 1 year.
Right.
Then, you, as Rajiv said, you can get any number you want. Why not make it 25%?
Okay. Dr. Bhalla, just give me a minute, because I want to keep this a little more broad-based. I want to keep this, yes. Okay.
Claiming victory on the basis of sandstand. Right. Sorry?
Okay, I'm not so sure if any other methodology is going to give us diametrically opposite numbers, but that said, I want to keep this a little more broad-based, and I'll go back to Dr. Rajiv Kumar. And Dr. Rajiv Kumar, you had instantly tweeted after these numbers came in that higher growth rate in 2009 to 2011 and in previous years was funded by untenable fiscal deficit and reckless expansion of bank credit. I will talk to you about bank credit separately, but let's just get the fisc out of the way. I was speaking to Montek Singh Ahluwalia and to Padayappan Chidambaram, and they both say that at a time when you're sitting at the cusp of a global recession, you don't look at fiscal discipline. You will have to go in for fiscal expansion. That is what the world was doing. Whether it was the US, the UK, the Eurozone, you had to give a fiscal steroid. You know, giving 1, 2 or 3 packages perhaps is debatable, but you had to go for fiscal steroid. And truth be told, I'm just being the devil's advocate, they had contained the fisc for the first 3 years of UPA 1, and they were giving themselves elbow room for the fisc to expand. I'm just being the devil's advocate. Does that not impress you? Can you do fiscal deficit reining in sitting at the cusp of a global recession?
Supriya, the point is that yes, they did control the fiscal deficit and they did notify the FRBM Act within months of taking over the government. But remember that it is in 2008-9 that the fiscal deficit dipped from 2.5% to 6% of GDP. 2.5% to 6% of the GDP, and the entire fiscal deficit was actually announced in the budget which was presented in March on February 28th of 2008. Now, even the softening of the stock markets in the West, in Europe and America, I think started around April or so, with the crisis coming up in September 2008 when the Lehman and other things happened. In fact, I used to quip at that time that in India we are so smart that we anticipated the global crisis. But the truth be told, and as everybody who has pointed this out would know, very well know, that the finance ministers or whoever, which is that this was done for the 2009 elections. That was the budget for the debt, the farm debt waiver. That was the budget for the sixth pay commission, and it was just simply open up all the spouts so that you get the economy growing. The one after the crisis, which is the next year, which is 2009-10, it went up further to 6.5%. I mean, and which is when all the excise duty cuts, etc., were announced. Now, somebody can argue, yes, that is what but remember that already in the first quarter of the last quarter of 2008-9, January to March, our GDP growth rate had already recovered after having gone down from October to December. So that there was no seeming reason, no apparent reason for the fiscal deficit to have been increased even further, because the recovery had already started. India was saved, India was insulated from the from what is very often called the cross-Atlantic crisis. So this argument that this fiscal deficit was incurred to stave off the crisis, I think is just a very specious one.
Okay, you blame it on politics of the day and 2009 elections. Let me just touch upon another very important point that you've raised, and that is, because I want to come to the rupee next, and that's the point you raise about indiscriminate lending. Surjit Bhalla, in a boom year when economy is growing at levels of 9 or 10%, I'm presuming, and this is simple economics, lending levels will be higher. There will be greater credit offtake. And of course, while the NDA government blames it all on UPA, the reality is that lending was higher, overcapacities were created. Why did it take the present government so long to bring in corrective action? I have no sympathy for indiscriminate lending of UPA. But what I frown over is the inordinate delay there was in getting to corrective action on NPAs. Only in the fourth year did it start. Dr. Bhalla.
Look, in terms of corrective action on the NPAs, you have to give credit where it is due, that the government spent a fair amount of time, and legitimately so, in order to bring in the bankruptcy law. That is one of the biggest reforms we have ever done in India. And in some sense, or more than one sense, it provides a base for resolving the NPA crisis. So, it is not a band-aid. What we had previously tried back in any time earlier that we had this was rely on economic recovery in order to take care of the problem. This time it is more than a band-aid. It's actually remedial action. It's actually giving the correct medicine or providing the right environment for the patient to become healthy and permanently healthy. So there might be, I would agree with you, maybe it could have been done a little bit faster, etc. But I think the progress in NPA resolution is quite impressive. Certainly could have been better. Absolutely no gainsaying that. But I think to argue
glad at least
that the government was sleeping
I am glad
at the wheel is incorrect.
Okay. I am glad you're being candid. It could have been better, and my own contention is it should have been before and not in the last or the fourth year of its tenure. Dr. Rajiv Kumar, I'll come back to you because one has to talk about the rupee. That seems to also be becoming a part of the partisan political debate. You have very categorically said that the real effective exchange rate right now for the rupee is under 70. If that is the measure we are taking, then the real effective exchange rate for the rupee in 2013 after the taper tantrum was also 66. Why was the same metric not used then? And the second question, if I may be allowed to follow it up with, is that what is the strategy to contain the rupee right now? Is depletion of forex reserves the RBI doing the real solution? Because that perhaps results in non-deliverable foreign markets punting on the rupee. I mean, what is the strategy to contain the rupee? You may want to criticize the UPA government, but look at what they did with the CAD in the last year and look at what they did with the gold 80-20 scheme. I'll come to details in just a bit, but I'm just trying to understand what is the strategy to offset impact of a depreciating currency. It is a currency that should trade in the market, but there have to be measures to offset.
Yeah.
What are those?
Yeah. Yeah, but Supriya, you 3 points that I want to make. The first one is that you have seen the strongest, the greatest deleveraging of commercial bank credit in these 4 years of NDA of the Modi government. You know, the commercial bank credit, which was as much as 30.9% in 2004-5 and 37% in 2005, 37% growth in commercial credit, and the causality is being reversed by saying that look, it is boom years, you know, which is causing the commercial bank credit. No, I'm sorry, the causality is the other way around. It is letting loose the commercial bank credit in completely exuberant punch bowl sort of fashion that has got the steroid, the economy on the steroids, and that is what has resulted in a fact that the commercial banks have completely deleveraged. They have been their credit to have actually declined. The net credit to the industry has declined in some of these years. So that is what the NDA government has had to face. You know, when in trying to, you know, as you say, create the demand and use up the excess capacity, etc. I mean, the extent of excess capacity that had been built up, you know, with the energy demand going down or being stagnant in these recent years until about 6 months ago, you had power plants galore all over the place. So much, you know, 30,000 megawatts of capacity having been created. So that's right. Really the first issue that we must really keep in mind. The NDA government has been up against it. On the rupee exchange rate, I'm glad to see that everybody who is an economist has agreed that this is not the time to say, you know, but what are we doing about it? You know, there are again no short-term solutions for it. We have said that there is no way that you are going to peg the rupee to any exchange rate. So therefore, the RBI intervenes to control the volatility, but the market determines the rupee exchange rate. Thankfully, it's not yet depreciated or not in a free fall as it was between May and September of 2013, when it declined by 25% in those times. And what we will do, and what we are actually doing is to boost our export. Just 1 second, Supriya, is to boost our exports. Now, it's very easy for us to start curbing imports and ratcheting down the demand, but that will then get the growth back down, and which is not an option that we want to exercise. And just one last thing, the Prime Minister's resolve to be fiscally prudent has been well demonstrated when he refused to cut the excise duties on petroleum taxes despite tremendous pressure. So I think that's the sort of matter.
Dr. Kumar,
can I just come in here?
Dr. Kumar,
can I just
No, just 1 second, Dr. Bhalla. Dr. Kumar, my question to you is, just 1 second, Dr. Bhalla. My question to you really was on the strategy of the rupee. Let's talk about the investment rate. The bank credit has gone down because investment rate has gone down from the peak of 36% of the GDP to 27% of the GDP. You can keep talking about the cleanup, but where is the economic activity? And also on the part of the rupee, you are right, RBI is intervening. But the reality is that those May to September may mayhem years that you refer to, they could bring in FCNRB, they could pull in $30 billion back, they brought 80-20 scheme, they could contain CAD from 4.5% of the GDP to 1.3% of the GDP. There was long-term bringing in on FDI. I think the Myram panel spoke about that. Where is the strategy is what I want to know. You are right, the RBI is defending it, but we want something more substantial, a more strategic approach to the rupee. It just can't be left to depletion of billions of dollars.
Just a second. Supriya, just a second. Just a sec.
Can
you give us a chance?
Can I answer that?
Will you give us a chance? What is the strategy required for? Surjit, just 1 second. What is the strategy required for? The rupee is not in a free fall. The rupee is not yet at its natural rate. The rupee was overvalued by 17%. It has declined by 9.46%. So why do you need, what sort of strategy do we need? You need the strategy to prevent the current account deficit from getting wider. And that is what we will do by one, substituting the import of oil and energy as far as we can, and the Prime Minister has announced it several times. We will do that by boosting our merchandise, goods and services exports, which is again beginning to rise for the last 6 months. They have been on an increase, the exports, and they've, and the decline has stopped. And the latest data is that even our labor intensive exports like gems and jewellery have begun to rise again. So that's the strategy. You don't need a strategy to try and stop the fall in the rupee, because the rupee is just trying to find its own natural value.
So by that logic, in 2013 also we could have said rupee is trying to find its own natural value. But let me go across to Dr. Bhalla. Dr. Bhalla, come in. You want to make the point on the rupee, but I also want to ask you the question on investment rate. It has plummeted from 36% of the GDP in its peak to 27% of the GDP. Go ahead.
Yeah, okay. First on the rupee, and here I want to disagree with you, and I want to disagree with my very good friend Rajiv Kumar and perhaps a lot of the others, and agree completely with what the RBI is doing. Fact number one, there is no evidence, let me repeat, no evidence on using the RER rate to derive any conclusion about any export growth in India. So therefore, to refer to the RER rate as that the rupee is under pressure or needs to devalue, as Rajiv is saying, I think is incorrect. I want to put that on record. This is false. Second, let's look at how the rupee is not a currency on its own in this world. Have you looked at how the rupee has performed relative to the other countries, including developed countries? And you will see that the depreciation of the rupee is very comparable to some of the leading currencies in the world. So we haven't, let me underline, we haven't depreciated more than the developed economies. Average depreciation has been about 7%. We've been about 8.5%. So let us get this notion out of our heads that somehow or the other the rupee has depreciated much more than the others. The correct comparison, of which Rajiv also alluded to, in 2013,
to be an oasis of growth and an oasis of macro fundamentals,
most amongst emerging markets, and this time we were let me finish, and this time our rupee has performed really well. Let us not get too preoccupied with a level of the rupee as 70 in absolute terms.
Rupee is the worst performing currency in Asia.
Investment rate.
Let there be no denying that. Surjit Bhalla, I agree with you. 1 second. I am not prepossessing. Rupee is the worst performing currency in Asia. Rupee is the worst performing currency in Asia, and I wonder why. Because we are an oasis of growth. We have strong macroeconomic fundamentals. There has to be a trend formula which the rupee is following. We can't live in denial, can we, on this?
Wait. Okay. Can I speak?
Go ahead.
The worst performing countries in Asia.
Yes.
Hong Kong is a fixed currency. Have you looked at how much the Chinese currency, the strongest emerging market currency, has depreciated? It has depreciated about 1 percentage point less than we have. So you're looking at Hong Kong and Singapore and then defining Asia. There's the rest of the world as well, including China. Now let me answer your question. So there's absolutely no basis for maintaining that the rupee is depreciating more. You know, this gatta lagao that people come up with is the worst performing currency in Asia without looking at anything else. I completely disagree with. Now let me come to the important point you raised about the share of investment.
You disagree?
If you now look at the share of investment to what?
Yes. You have to keep it brief.
Yeah, so can I move on to the investment rate question?
Go ahead, sir. Just keep it brief, I'm saying.
Yeah. Sorry?
Sure.
Okay. So take the break, then I'll come back.
No. You can finish your point because I'm really... You can finish your point. Is my voice not reaching Dr. Bhalla? Okay. I'll take a quick closing question with Dr. Rajiv Kumar because I'm really running out of time here on the show. Okay.
So on the investment rate, look at what has happened to the real investment rate.
Yes. Okay.
That is the price of investment goods.
Go ahead, sir. Go ahead.
So let me, there's too much crosstalk. Let me finish and then you can come in. Now, on the investment goods, which is the question you asked on the share of investment going down from 36 to 27%, it so happens that was already down to about 32, 33% at the time when the NDA government took over, when the BJP government took over. Now, look at the real share. The point is that the price of investment goods has gone up much less than the price of other goods. So therefore, look at the share of the real investment rate, and the real investment rate, that is real investment versus real GDP, has declined at about 2 to 3 percentage points, and that is it. So therefore, that is another conclusion that I think is very, very misleading to say that the investments have really collapsed.
Okay. I have a last question, and Dr. Rajiv Kumar will let you have the last word on the show. You've always been known to me as a candid man. So be candid this evening and say, even as the partisan political debate on growth intensifies, are there new macroeconomic vulnerabilities that are coming to the fore on the Indian economy or not? Whether it is the twin deficit problem that now seems to be staring at us, whether it's high inflation that's picking up, are these new concerns or not? Be candid this evening.
Now, Supriya, first let me answer the investment question, which is that if you look at the decline by 2 or 3 percentage points, almost all of it has come from decline in household investment. Please look at the breakup of the investment and you will see that the corporate investment has held up. In fact, the investment by the mid caps has gone up, and which is what explains the huge rise in corporate bonds, which have been growing, and also in the IPOs. So this blank talk about investments crashing, etc., is just wrong. And the household investment has declined because what we have done with the real estate, which is to try and clean it up. And therefore, all that money that was sloshing around in that, the speculative investment money in the real estate has now found its way, to the equity market and to other avenues. On vulnerabilities, Supriya, I think the kind of reform that have been taken in the last 4 years have put us in a very strong macro situation, and I don't think we need to worry about them at this stage.
I do.
And I'm actually being candid.
I do hope history will be as kinder to... I do hope history will be as kinder to the last 4 years, economically speaking, than it has been to Manmohan Singh's UPA government. I do hope that. The reality is that we can keep talking about this, but jobs, and I know that's another data point that we debate on, is not a reflection of good investment. Having said that, let's keep our fingers crossed for Indian economy, because growth, like say, is a rising tide that lifts all boats. Today, the UPA stands vindicated according to them. The NDA government keeps insisting that growth numbers will be better. This is a more sustainable foundation that has been laid. Let's keep our fingers crossed and hope that effect multiplies. On that note, we'll take a quick breather. These were two sympathizers of the NDA levels of growth. We come back with a big critique. Padayappan Chidambaram in conversation with us. We put up the uncomfortable questions to him about a high fisc and an even higher inflation. And is that all worth it as far as growth is concerned?